All right, everybody, thank you and welcome. Thank you for your patience. Welcome to What Are the Four Ways to Increase Profits? Um, Part 3 of our tiny training series here at Montana Childcare Business Connect, a program of 0 to 5 Montana, funded thanks to our partners at the Department of Health and Human Services and with the assistance of our partners at the Montana Small Business Development Centers at the Department of Commerce. I recognize we're going to be blowing through some content today, so be prepared. We're going to talk some jargon a little bit here, but we're here to support. So if you've got questions, we're here to help answer some of those questions both before, during, and after. Some context on what the Tiny Training Series is. I recognize some names and faces, so this will be duplicated information for many of you. The Tiny Training Series is a series of 7 30-minute webinars the second and fourth Thursdays of every month, specifically during nap time, and attendance at 4 of these equals 2 hours of ECP credits. So again, if you haven't put your name and your title and your business into the chat, please do that so we can make sure to get you credit. We want to define basic business concepts for you. We're also going to feature some of our partners and prepare for more action-oriented how-to content this spring. So far, we have done 2 tiny trainings, What is Business Connect and What are Business Plans? Those recordings are available for viewing now. And today we're going to talk about increasing profit. You can see some of the upcoming schedule as well. 0 to 5 Montana was founded in 2018 with the promise of stabilizing, innovating, and building the early childhood system in Montana so families and communities can thrive. We expanded in 2022 by creating the Montana Childcare Business Connect program. Hold on, I'm going to adjust a couple of things here on my screen. Our focus with Childcare Business Connect is to support communities and entrepreneurs with the business elements of starting, owning, and operating programs. We're going to provide those services in 5 critical areas: training like this and other longer form content, technical assistance, which is where I focus most of my time. And then we're going to be launching mentorship and community capacity building this spring, as well as our web-based resource hub, hopefully in March as well. Currently, we have 3 full-time staff. Alex DuBois gives us 25% of her time. We've hired a community navigator who starts in February, and we'll be adding another position soon too. A little bit about me. My name is Jason Nitschke, Senior Business Advisor with Childcare Business Connect in 0 to 5. My world over the last 9 years has been helping entrepreneurs turn their ideas and dreams into some form of reality. A little bit about my background, and I'll tell you why I give you a lot of this stuff. My undergraduate degree is in journalism and political science. My master's work has been in communications. At no point along the way have I ever taken a business class, a marketing class, an accounting class, an HR class, or any of that kind of stuff. I have learned those things over the years by being an entrepreneur, by training myself, giving myself professional development opportunities and those various certifications, and then working with entrepreneurs like you all. Our goals for today is to help with some of that. We're trying to teach you how to be business owners. Many of you are going to understand some of these concepts already. You're going to understand some of these formats already. But we're going to give you another way to look at some of these things. And if you've never seen these things before, wonderful. We're going to talk about financial statements, then we'll get into defining revenue and costs, and then we'll talk briefly about how those things behave within a company, how they act and interact with your company, and then ultimately get you to these kind of 4 core areas to look at, evaluate, and make modifications to as you're operating your business with the goal of driving your profit up. But first, let's start with this, a concept that many of you in the early childhood industry have heard before. And what I'm going to talk to you about today fits within this. The terms and the jargon may be a little bit different, but the iron triangle is getting you to full enrollment. We want you to charge tuition and fees that cover the costs of operating a business. And that's 100% of the costs, including profit to your company and compensation to the owners. And then we want you to collect full fees. That's 100% of the fees, not 70% of the fees, or not just allowing past due accounts to go away. We want you to collect full fees. That's the iron triangle. Also, we want to help you learn the language of financial literacy so that you can understand the difference between these various terms like profit and cash. Ultimately, so that you can use tools within your business to make better business and financial decisions. So why is some of this stuff important? A business, by definition, is the process of selling a product or service in effort to make a profit. An entrepreneur is the person who is accepting the risks of owning and operating a business. And if done well, entrepreneurship is a pathway to business success that can potentially create generational wealth in your family. And I want to illustrate this by telling a story about a family. That guy right there in the center is a guy named Albert. He was a dirt farmer in eastern Montana. He raised 8 children. One of those children was this guy. That guy's name was Richard. Richard was, or he was a plumber, went into World War II, came back and he went to work for a company in Great Falls called Whites Incorporated. He was a plumber. Ultimately, Richard purchased that company from Miles White, a guy who started the company. He grew that company, Richard did, into 3 locations around the state, Great Falls, Havre, and Billings. Ultimately, at the end of the day, he sold part of that company and he retired. This picture is from May of 1980. His wife, after he died in 1985, owned parts of that company until the mid-90s. That family happened to be my family. That little kid on the right there is me when I was 4. My mother is on the left. Her parents were also entrepreneurs. She's holding my sister, and everybody else in this picture are my great aunts and great uncles and my great grandfather. And the reason I illustrate this story is that because wealth can be a pathway to creating financial stability in a family that can be passed down across generations. It can leave a legacy. And if you need to use it when you pass it down, you can. If you don't need to use it, you can pass it on to the next generation. My family, we're not millionaires, but we do have a little bit of what's left of my grandfather's company after he sold that, and we sold parts of that company in the mid-90s. And it's created enough financial stability in our family that if I don't screw it up and my dad doesn't screw it up and my sisters don't screw it up, we'll be able to pass it on to our children as well, so that their lives are enriched and they're more financially stable. And this was done because that business was run well. And let's start with the content now. I'm going to prepare you with a question, and I want you to type the words into the chat, please. And Rhonda, you can tell me some of these as they come up. The word profit. Where does that word show up on a financial statement? Which one? Pick one. I'll give you a couple of seconds. Is it on the balance sheet? Is profit on the statement of cash flows? Is profit on the income statement? Is profit on the bagel land statement? And yes, E, please don't select E. Tell me what you think.
Got a couple of income statements. Oh, I think they're all income statement.
Perfect. So we'll move on. That's the correct answer. There are going to be people out there who are going to say, well, Jason, net income, net profit sometimes shows up under equities and net worth on a balanced balance sheet. And you're not wrong, but that's really an effect of the term retained earnings. The point is, it's on the income statement. So that's the statement that we're going to talk about primarily today. But more broadly, what are these financial statements? Well, they're written records that convey a business activity and the financial performance of that entity. For those of you who were on the What Are Business Plans call a couple of weeks ago, I talked to you about every decision that you make in a business has a financial impact. Well, these are the primary statements here that are going to document and track those decisions. And so if your books aren't wonderful, then we need to get them better. But for quick definitions here, income statement is the statement of revenue coming in, expenses to operate, and those one number less the other number equals the profit. Sometimes that's a positive number, sometimes that's a negative number. That's the statement that you pay your taxes against. The balance sheet is a document that tracks what you owe and what you own. So what you got and how you paid for it. The statement of cash flows is really a list of all money in and all money going out. The funny thing, however, about financial statements is that if you've had a bad income statement, you've had a singular bad year. If you've had a bad balance sheet, your business might be bad because the income statement tracks periods in time, snapshots in time. The balance sheet is the tracking of your business throughout the life of your business. Our goal here is to help you and encourage you to plan properly, to monitor your financial position through these financial statements. Use these statements to understand the dynamics and the relationships between pricing, volume, and the cost of doing business so that you can manage your company and manage growth. These documents truly do provide a pathway to financial literacy and financial solvency. Some of these terms, yes, I recognize they're accounting jargon, but these are terms that you can learn. And there is overlap to this concept that many of you already understand that are presented in the Iron Triangle. So let's get into defining some types of revenue here. And we're gonna now just focus 100% on the income statement and give some definitions to these terms. Operating revenue is money that you've earned from the sale of your service. This is the sale and delivery of your services to families. But it can be other stuff too. For example, if you happen to own property and you rent part of your property to another entity or other people, that can be operating revenue as well. And remember the concept of other services when we get to the 4 ways to increase. We're going to talk more about that. Non-operating revenue is money that you've earned from non-core business activities. Some of you right now are trying to figure out how to pay taxes on the grant money that you received last year. It can be interest if you, for example, if you charge interest to families that are past due, which is allowable in the state of Montana up to a certain percentage. So that was defining types of revenue. Let's define types of costs, and we're going to get into a little bit more granular detail here. Income statements track 2 primary types of costs. Direct costs, which are expenses directly related to providing that product or service. For example, it can be food, it could be classroom materials that need to be turned over. It can be direct labor, in other words, the staff that provide the services in your classrooms. Operating costs are not directly related to providing your service, but they are essential to operating your business. These are things like insurance, licensing, marketing and promotional costs, professional services like accounting and legal, and then other stuff as well. Now let's tweak this a little bit to define how costs behave. And you'll notice that pretty much everything stayed the same here, except for the core terms. Variable costs are expenses that rise and fall in direct relation to increases and decreases in revenue. These are your cost of goods sold, which is the accounting term for things like food and classroom materials. Your direct labor as well, again, your staff providing the services. That's variable costs. Fixed costs are expenses that do not rise or fall in direct relation to increases or decreases in revenue. So you'll notice we're just tweaking the terms a little bit to understand how they behave within your company. Direct costs are the exact same thing as variable costs. Operating costs are the exact same thing as fixed costs. So you're making a face at me. I'm seeing it in some of your faces right now. What does this mean? Why do I care? By understanding your financial statements, how diversified your revenue is or is not in most cases with childcare industry businesses, and then how costs interact with each other and with revenue, you can start to think critically about what to do next. So now let's get into those 4 ways to increase profit. And these terms are going to come back. On the top half of your income statement, you've got revenue, right? So one concept to apply here is increased price. Sound familiar to the Iron Triangle a little bit? This way, when we're talking about this, we're talking about rate adjustments. It can also mean collecting better. I've had conversations with some of you about the concept of bad debt and letting bad debt go, and collecting from families that can't afford to pay in a certain month. Ultimately, we've got to collect better. So that's one way to increase your overall price over the span of a 12-month period. There's also this concept of increasing your volume. So that's similar to the iron triangle. We're getting to our complete occupancy, or actually getting above that in some form or fashion. There's also this concept of diversifying revenue, asking yourself the question, what assets do I have in my company, both fixed assets, things you own, and human capital, human assets, people you have employed for you. And how else can you use those things to increase volume, diversify who you're selling your services to? There's a lot more to this, folks. I get it. Let's talk about the bottom half of your income statement now. So on one side, on the top, we're trying to drive up revenue. On the other side, we're trying to contract. We're trying to get skinnier. On costs, we're talking about decreasing variable costs. That can be, I'm seeing the faces already. Jason, you cannot be seriously bringing up a decrease in wages and benefits in this industry, in this world today. And you are completely correct. I hear you. However, there are some ways to do that when we think critically and look at various programs and services that are out there. And I'm going to go into a little bit more detail. Another way to decrease variable costs, decrease your food costs. What does that mean? Well, it depends. The fourth way is to decrease fixed. That means to manage your budget better and or to buy better. When I was growing up, my dad would drive me across town all day on a Saturday when all I wanted to do was ride my bike, ride the skateboard, or play baseball with my friends. He was looking for the next cheapest 4-pack of toilet paper. And so buying better with this concept, and I just got an email from somebody about the insurance topic. How do you buy better? Well, you shop around, you be creative, and you work at it. You manage your budget. Let's dig in a little bit more to this kind of stuff. I know that many of you are already participating in various programs to decrease your variable costs. Not everybody is. Not everybody is participating in the CSCFP program. Not everybody is a Head Start collaboration partner. Not everybody analyzes their staffing pattern. Not everybody considers outsourcing certain services. Not everybody considers managing direct labor in a proactive way. So these are some ways to drill in and consider opportunities within financial management to drive up your profits. A little bit more detail on decreasing of your fixed costs here as well. This concept of cost offsets. Right now in the legislature, there's all of this discussion about tax credits on the family side. Well, there are some programs that can be utilized to the benefit of a business as well. These cost offsets, things like the Department of Labor's Incumbent Worker Training Program, that is a cost reimbursement for professional development. Not all childcare professional development is eligible for this program, but some things are. Work Opportunity Tax Credit is a tax credit for hiring certain categories of people. Buying versus renting can be more cost effective and vice versa. Again, this concept of shopping around and then restructuring of debt is something that I have tried to help people with quite a lot, especially over the last 3 years during the pandemic. Restructure of debt is never the magic bullet that people seem to think it is, but it is one tool in a gigantic toolbox. So now some of you are probably making faces at me going, okay, now you've said a bunch of industry jargon to me, but where do I actually start with this? I would suggest let's start with an analysis of the financial status of your company. That will indicate where the potential largest gains are possible, and start where those small modifications can have the largest impact. That's where I would suggest starting. If you don't know how to do that, feel free to contact us. we're willing and able to help you walk through that process and teach you the process of financial analysis. So in summary now, what have we learned? Some of you may remember this plan, run, review, revise graphic from the What Are Business Plans training we did a couple of weeks ago. And that's really all it is. Identify what the opportunities are, come up with a plan, implement the plan, review the plan, and see what works, what didn't work. And if we can do this, I promise you, you will find out that finance is fun. I've worked this process with dozens and dozens and dozens of businesses across the state of Montana over the last 9 years of my life, and it works. It may not seem like it works, but it does. If you understand the framework of finance, you can understand how to make better, more well-informed decisions, and better decisions drive better actions. And to bring it full circle, if it's done well, entrepreneurship, and that's all of you who are operating childcare facilities, regardless of provider type, that's all of you. Entrepreneurship is a pathway to financial stability if we do it correctly, and it creates the potential for generational wealth. And my hope is that some of the generational wealth that came from my grandfather that will trickle down to me eventually will ultimately be passed through to my 9-year-old daughter, Logan, there. Some of you are probably asking this question, where can I learn more about this? There is a wonderful training seminar presented by the Montana Small Business Development Center Networks called Profit Mastery. I have facilitated that class for the last 8 years. That is a game changer for businesses. I've worked businesses through that process who have gone from bordering on closing to 3 years later, having expanded 400, 500, 600%, who are now substantially more profitable, who are taking home a lot more money. You can take that class, Profit Mastery, online. There's a fee associated with it. It is 16 hours of your time, but it is well worth your time. It is facilitated as well in person throughout the state. You can find the current calendar, if there are any classes available throughout the state, on the training and workshops website for the SBDC. I am also happy to help you work through this process in one-on-one, no-cost, confidential conversations. You can find my calendar on our website, 0to5.org. So coming up, just wrapping up here with 4 of our last tiny trainings. We're going to introduce you to the cooperative model in 2 weeks. We'll talk about cost-informed rate setting, more industry jargon, but that's trying to get you to a precise and correct price for your services. We're going to set some expectations in the types of marketing content, and then we're going to talk about insurance and risk management at the end of March. If you're interested in any of our recordings, you can find them on our website. We've also launched a new YouTube page. I'd also invite you to visit our website, send me an email, send me a formal request for assistance, schedule a meeting on my calendar, and then connect with us in any way that you want to or can. That is the last thing I've got for you. Happy to take questions. And this is a new QR code for those of you who couldn't take it last time. This is a new one for today. So Rhonda, if you would like, we can start to field some questions.
Sure. Yeah, if there's any, you can either jump in or put it in the chat. And as we're maybe waiting for some to come through, just a reminder, if you haven't entered your name in the chat, to be sure to do that. I tried to go through and capture everybody, but the screens jump around, so make sure to enter your name in the chat. I'm not seeing any questions in there yet, Jason.
Rhonda, do you have any questions that you would like clarification on?
I don't think so.
We should talk about this beforehand, shouldn't we?
No. I learned a lot though, actually.
I was wondering, would you ever have a topic around like payroll and setting wages as part of this continuing conversation?
Thank you, Colette, for the question. Rhonda, would you like to answer that question?
Yeah, I think any of those that we're hearing are needs out there. We definitely know, we heard loud and clear at a gathering we had last fall that HR in general, which that would fall into, is a need. And so we're looking into some of those trainings, whether it be one of these tiny trainings, or it might be a larger one. We are, as we move forward, we will have some trainings on CCT that are just accessible all the time, you know, longer trainings. So yeah, I've written that down. I think that that's a good conversation right now. It's we know, you know, just workforce in general is tough right now. So programs are looking at raising wages and just managing payroll and all of that. So, so yeah, I've got it written down, and we'll look into that. Thanks, Colette. So there is one question again, the recordings for these will be posted on our Business Connect website. So if you go to 0to5.org, and at the top, I think it says like, what do we do? You can click on that and you'll see Montana Child Care Business Connect, and it'll take you straight to our page. And
Yeah, I would also add, Rhonda, to Colette's question, if there is this question about that right there, that's the website. You can get to our recordings on that website, 0to5.org/child-care-business-connect. You can find it there. You can also just search 0 to 5 on YouTube and it'll get to it. But to Colette, your earlier question, there's a broader conversation to be had about what your community can pay and afford to pay. Staff depends on a variety of different things. There is data out there on this. Some of it's current, some of it's old. We can do some math on that. So if you'd like a little bit of guidance on where to find some of that information, feel free to shoot me an email. And there it is. There's our website. Is there other questions?
I am not seeing any. Yeah, I'm not. Just a thank you. That people might be reaching out to pick your brain. So yeah.
That's great. Happy to help. I'll sit here for another 30 seconds until the top of the hour in case one additional question or so pops in.
I think one other thing just to be aware of, if you weren't on our Montana Child Care Business Connect, another project that we're working on is a cost of care tool. We're putting together a work group of a group of providers that have all sorts of experience to help inform that tool. Many of you use the STARS one that's available. Our contractors have that, and they'll be looking at that. And so that is something, you know, that will help with this whole piece too, trying to figure out your revenue, your expenses, all of that, really what that cost of care is, more than just the market rate and going off of what the state reimbursement is. So we're excited about that. We're hoping for kind of a soft launch of that by this fall. So definitely be watching for more information about that.
Yeah, and Casey did just reference that. I think it's a good point. You can charge more than the state's reimbursement. It is 2 o'clock. We appreciate everybody's time. Thank you very much, and join us next time for the next Tiny training. Thank you.
Thanks, everyone.